So, well, I called it compliance nirvana. That was actually a switch from one of our prospects we talked to, and it was a female. She called it compliance porn, but that's something that those two words tend not to go too well together, and I wasn't sure how that's going to look in the program. Anyways, I'm Carl. I run sales for ClauseMatch. We're a London-based company focusing on documents and structuring documents, which is a very new way of looking at your old Word and email communication. As we have been part of Barclays Accelerator, we won the BBVA Open Talent Challenge in 2014, and we were also part of Accenture's FinTech Innovation Lab last winter, and been working with banks across the board in that. One of our use cases is in and around policy management, which falls squarely into the RegTech bucket, so to speak. So I looked at the program. I think there's one talk tomorrow about RegTech. Otherwise, it's a nascent area of the fintech side. Some people call it FinTech 2.0. Don't know what to say about it. In any case, that's where we sit, and that's what I'm planning to talk about. So I know I'm in Finland. I'm Norwegian myself. You can hear my accent, so not known to be the most talkative guys around. But does anyone know, can give me a definition of RegTech? No, it can be tricky. You might not know what it is. So we found one, and we put this together. So deeper understanding of the regulatory environment, coupled with modern technology. So why do we need technology around regulations, or why regulation in itself? That should be self-explanatory after what we discovered 9 years ago now or so. What was the financial crisis, fall of Lehman, Bernie Madoff, all these things? I think it's constituted. There's a need for accountability, control, risk management, and all these things that have come out of it. And regulations and regulators have piled on a lot of these things after the financial crisis in particular. Now, Thomson Reuters did a survey recently, and they said that there was over 200 regulatory changes every day on a global scale. So, as a global bank, how are you going to manage that? So far, they have thrown people and consultants at it, but that's not really sustainable. As well as they have been fined. Some people would argue that the failure of the banks themselves and the regulators was what led to the financial crisis itself. And if you have seen the Big Short, you can probably relate to that. So then, the more important thing for banks is how much money have they spent on this? They spent $321 billion on regulatory change and compliance, including fines, which is a big source of that, since the financial crisis. I think the presenter I was here before, she mentioned in 2015 or 16 the total growth capital for startups or something like 120 billion. Well, this is a little bit shy of 3 times that, and that's what banks have spent on this area, and hence it's an important part, and then it's important for banks to look around that. So I want to talk about what I call a regulatory ecosystem. Some people know what I mean about that. Some people might not know. So I'm going to step a little bit back, and then ultimately I'll head into the core point. So as a lot of people have seen, so legacy, there's 2 kind of approach to this. It's a legacy approach, and then there's the kind of ecosystem approach to it. Legacy system approach in compliance has been one company, we can do it all. They say, okay, it's very easy for you. You just buy our solution, you deal with us, you deal with me, and then we do everything for you. And it will be great. The last 15 or so years have shown that that's not the reality. A system while a bigger system can be good, it's not good for everyone. It's typically a several-year implementation, expensive. You need consultants for change management, etc., etc. Big companies, you can almost include the banks themselves. But typically not agile, not necessarily quick, and all-in-one solutions end up being too generalist than really focus on what's important, and that's being felt down into the organization when you end up someone in OTC derivatives trading, trying to fix something around the system that was selected by the equity traders, for example. So the converse of that is, of course, the small companies, and then this is a kind of a model for that. Small companies are agile, they are quick, and more importantly, they grow up. They start with the notion that small companies realize they can't do everything for everyone. So they specialized in the successful ones, at least, tend to specialize in one field, but they also open up their system for other things. So you end up with a system where the all-in-one might be doing four things, but they might be doing it, but they're not all good. While you might have 4 vendors specializing, but then are able then to exchange data as you go by in a much more efficient solution, and you're moving to more of a best-of-breed approach. As part of an ecosystem, there can be 20 vendors there, but this particular bank has chosen these 4, which means you can, if vendor 3 is not performing, you can swap them in and out much easier than you would otherwise with a big solution with 2-year implementation time. So how does this relate then to a regulatory ecosystem? So knowing well that there's not so many people necessarily that know how a regulation moves through an organization, I'm going to walk through that and then explain a bit about that. So you have typically 3 components. You have a team called regulatory monitoring. They receive then all the regulatory feeds in from any changes happening in the world. So the FCA, Monetary Authority of Singapore, you have all the different regulatory bodies, and they change things all the time. Referring back to the study that there's about 200 changes a day, these guys are very busy. Now, what they then so this team, what they do is they make a decision on what's impacting the business or not. Is that something we need to make a change on or not? If that's a change is decided to be made, well, that needs to be reflected in our policies across the bank. So you have risk frameworks, policies, standards, procedure documents, etc. The policies effectively is the bank's own view of how what the regulations are for them. And then on the back of that, you have the internal compliance, the risk and controls, the KYC, so know your customer, and the monitor money laundering, transaction, transparency in transaction, MiFID II, these kind of things. You find a lot of RegTechs actually sitting here, because there's a lot of manual and mundane work being done on that part, and they're effectivizing that. But today in the bank, something happens in the team here. They put a project group together. It can be one, it can be several people from compliance, and they've been told, okay, this is our assumption, this is our impact assessment, this is what we need to get done. Now you need to find everywhere in our policies and procedures where this applies. That's a manual job. So if the poor compliance officer is not experienced, having a bad day, making a plain mistake, that has a significant operational or business risk for the bank, and this happens all the time. So what if we then, the thought is then, with these 3 siloed approaches as it is in most banks, at least the banks we've talked to, what if you can connect all of that? So what if you could say, automatically, there's a regulatory change, automatically it can tell you in which policies, in which area of which policies and procedures and all these kind of things, where do I actually need to apply those changes, and how do I need to do it? And subsequently, in which risk and controls does that affect? Does that mean we need to change things in our trading systems? Does that mean we need to change processes around here on the back end? That is all manually done today, but can be connected together, and this is something that we are working on, not alone, of course. The interesting thing about that, so once you then have all the data connected, you can do some really interesting things. At least we think so. Something like horizon scanning. So what are people talking about? What are influencers talking about? What are regulators saying in speeches, but is not instituted into regulation just yet? What about legal precedents? What is happening in one jurisdiction in the US versus Europe versus Asia, these kind of things. And ultimately, again, with that whole data concept, you can then apply machine learning and natural language processing on top. So could you, foresee a regulatory change happening, and could you do an immediate stress test on your organization to see if this regulation changes, what effects does it have on costs, on people, on systems, etc. As I mentioned, this is something we're currently working on, and so anyway, financial institutions, your other startups, if you're in the RegTech space or in a particular side there, or the consultancies as well, we'd love to talk to you about this aspect in RegTech. Thank you.